Wall Street Week Daily segment. The host of Wall Street Week, David Westin, had a chance to catch up with Darrin Williams. He's the CEO of Southern Bancorp, and they discussed his concerns about higher interest rates and how it's impacting his customers. Take a listen.
It's starting to put a little pressure on some of our customers, particularly our small consumer borrowers and some of our small businesses. As we have our loan portfolio is pretty short in nature, duration, so about 20% turns over every year. Those small businesses that got loans, 3-4 years ago, they're now having to refinance that loan, and rates are quite a bit higher. And so that puts a lot of pressure on them to be able to make that payment that's significantly higher. And so really concerned. Asset quality is strong right now, but I am concerned about these rates stay long for a long period of time, stay high for a long period of time. Are they going to be able to make it?
Is there also subdued demand for new loans?
Yes, so we still, and I give just big thanks to our team. They're out working, and our loan demand still pretty strong. But I do think that you'll start seeing that turn down. Those particularly small businesses that can wait, they're telling us, well, I'm going to wait and see if these rates come down next year. But right now, loan demand still remains strong. But I do think you'll start to see pressure on that as we continue to have these high rates.
When you have the loans that are coming up, they're already out there. You have to be refinancing. Are people defaulting? They're putting off the payments? What are you experiencing?
Yes. So again, our asset quality continues to remain strong. I think on a $1.5 billion loan book, I looked, excluding our non-accruals, we only have about 20 basis points of people who are past due. Where we see the pressure is we see small consumers who have borrowed just a small amount of money. We do a lot of small loans. So we did last year almost 8,000 loans, $750 million in originations, and 54% was less than $10,000. And so that's the plumber who needs a wrench. That's the mom who needs to buy school clothes, whatever it might be. We're starting to see a little uptick in past dues among that crowd. Not our larger small businesses. They're doing okay right now, but over time, I'm still concerned about them as well.
What are those small businesses seeing from the consumer? Are we starting to cut back on some of the consumer demand? Because that's actually how they generate their money and their jobs.
Well, what you're starting to see more and more is consumers are really extending themselves from a credit standpoint. They're putting more and more necessities on a credit card. So I think there's a day of reckoning coming here. And so I'm really concerned because all the stimulus has washed its way throughout through the economy, and at some point in time, people are going to have to pay those bills. So I'm really concerned about how much people are putting on credit. But again, right now, things remain strong, but I am concerned about the long term.
What about the cost side of your business? Are you paying more for deposits?
Absolutely.
Because rates have gone up, and how much of a squeeze is that putting on your business?
Yes, so from August 22 to August 23, just 1 year, we seen a 125 basis point jump in our cost of funds. So we're feeling the pressure, and banks are competing. They're competing, strong for deposits. So we're having to pay up for those deposits.
What about commercial real estate? We hear a lot about, some people even call it a doom loop on commercial real estate, because there's a lot of commercial real estate out there that hasn't really been repriced fully yet, hasn't been refinanced. What is your experience with commercial real estate? Yeah,
so our commercial real estate, don't think the big buildings in New York. Our commercial real estate is largely strip centers that is owner occupied. So it may be a strip center, the owner has his business there, or has several businesses there, and so those are kind of mom and pop operations. They're still doing fine. So we're not concerned about what you're seeing, the concern that you hear about consumer real estate being, just having trouble. People, again, not working from, they're working at home more and more. And so I think there are going to be troubles. But fortunately for us, our commercial real estate is kind of a different type of commercial real estate.
So your Southern Bancorp thus far hasn't turned into a landlord. That is
no,
to say,
not
have
yet.
to take possession and actually have to run some of these properties.
Not yet. Not yet. We don't want to be in that business. You're exactly right.
Exactly. So what about your overall mode? I mean, a lot of companies are taking a hard look right now about whether they can expand much more, whether they should actually retrench. Is Southern Bancorp going forward, going backwards, just sort of holding pat?
Yes, so it's foot to the pedal to the metal. We're blowing and going. We're trying to grow. The CDFI and MDI space got a lot of attention, and we've got a lot more partners, got a lot of support from the government, and so we've gotten, we've raised in the last 4 years probably in excess of $300 million in capital, and that's growth capital. And so we're looking to grow. We are maybe zigging when some people are zagging. We're actually building a mortgage company, and that may be.
Yeah, but how does that work? With mortgage rates given where they are, why is that a good move?
Well, here's the thing. So for our customers, and we're serving the first-time home buyer, a lot of minority home buyers, they're not as sensitive to rate as other people. And so the way a lot of the capital we've received incentivizes us to actually make mortgage loans. So we've hired a new head of mortgage, and we're looking to expand in several states outside of Arkansas and Mississippi. And we're going to grow and go there probably first with our mortgage company. And you know, the foundation of what we do is about building wealth for families. And a person's home, a family's home, is kind of the foundation of wealth. So we're gonna marry some of our philanthropic supports with maybe some down payment assistance, maybe push some of those rates down, and help families, first-time home buyers, get into homes and help begin to build wealth for those families.
Are you seeing some of the at least mid-sized regionals pull back some, and does that affect your business?
Well, you know, we have several mid-sized regionals that are actually shareholders. They support our work and they get CRA credit for it. So I'm thinking folks like Cadence Bank, like Regions Bank, like Simmons Bank. Those are all folks, all banks who've invested in our shareholders in our company, and they are big partners. They are giving us a lot of support, a lot of help. They've not pulled back at all. They're pushing hard, pushing us hard.